Hey there, welcome to the channel. So today I want to talk a little bit about the crypto situation that we're in. So the thing is, with the crypto situation that we're in here, we saw, more activity. We saw that SBF got arrested finally. Wonder if Caroline or Carolyn or whoever the lady from Alameda, if she's like rolling over, who knows? We don't really know. But we just sort of continue to have the dominoes fall. And so we have, the big issue right now is CZ went on CNBC, the basically his interview. I mean, from most people's perspective, didn't really look like it went very well. Um, you know, when asked, whether his company could handle a clawback of $2 billion because, basically they got money from FTX. So FTX is in bankruptcy. So what will happen is if any money is owed the bankrupt entity, the way it works is they're going to go out there and say, okay, you owe us the money. We want the money, and they want the money back. And that's what the lawyers running the bankruptcy, that's their duty, that's their obligation to the creditors, is to try to find all that money. And I was involved in one where we were defrauded, but they were all over the world trying to find and get access to these assets, and they found some, but for the most part most of the assets are gone. But so that's going on as well, and his answers were not really too reassuring for a lot of people, I think. But what's interesting, so I don't know what's going on with Binance. I wonder if they're finally getting in trouble. Now, looking at the weekly bar here, you can see that it's still trading around a lot of money. If you look at this, look, this thing is still trading for, $240, but we had a big down week on it, down 15%. So, that's, I'm starting to wonder, because if we compare this BnB coin to the FTT, look at this thing. Basically, at some point over here, it started to sell, and then it just broke through the floor. And I don't even know why it still has any value left, but apparently it does. So that's kind of what we have at that point. So that's kind of what's going on in the crypto right now. So let's see about this. So I'm also kind of struggling with the new Minecraft here. So basically, it's funny. I'm like trying to make more of this flooring here, and it turns out that it's this stuff here is smooth stone, and this one over. So basically, what happens is this is a stone slab is what I'm getting now. When I used to get a smooth stone slab, so now it's like I find that, like, okay, now it's a two-step process, et cetera, that we have to go through to make this stone slab. So, kind of interesting. They've kind of changed the game. Now, I was working with a very, very, very old version of Minecraft. I mean, it might have been a 5-year-old version or more of it. So it's not a big surprise. Now, going back to the crypto stuff, when you look at what's going on with the crypto, I mean, I know that a lot of people are thinking that, look, there's probably more to go, et cetera, et cetera. And they're like, hey, look, once all these frauds and these companies are gone, that at some point that we can like move forward to, a new, environment. And, there's some people that are, I would say, being wise and saying, get your crypto off exchanges, not your keys. If it's not your keys, it's not your crypto, kind of a thing. And, from what I can see is that sounds like a pretty reasonable kind of a situation to kind of assume, but I think there's more of it to come. And from my view, it's like, look, I don't. So the thing is, here's probably the litmus test for me. When I go out there and I still look, as of like a week ago, you could still look out there, and Binance and other companies are still offering you, 5%, 6%, 10% for staking your crypto. And the question is, well, how can they do that? How can they pay you that money? Well, they can't pay you that money. There's no way in the current environment, there's no way that they can, basically pay you that kind of a return, especially when the 10-year is only at, near 4%. So they're saying that they can pay you more than that, when they offer you 10%. I mean, there's no way they can do that without doing certain things, right? They have to use either Well, they have to use leverage is how they have to do it. And so therefore leverage is by definition risky. So that's kind of what's going on. That's exactly the situation that's going on. And so that's what it means. So therefore, from my perspective, like this whole crypto thing is not done until we get to a point where you go to an exchange and you go on that exchange and they're not offering. There's no option available to you to stake your crypto and earn some godly amount of a return on that, you know. So until, that to me would be the sign. It's not going to be the price. I think the price of the crypto, the Bitcoin, is going to go lower. It looks like the BnB, there was some selling. As we look at the chart, didn't look good. And I would expect it to follow the FTX token to the floor, because it's like, hey, look, all these tokens that are created by a company and they print these coins, they just make them out of nowhere, and they somehow convince people that it has a certain value. It's just made up out of nowhere. And so it's just not a sustainable thing. It's obviously, I mean, to me, it seems very fraudulent, but it's also not a sustainable thing at all. And so until you get to the point where you get a situation where it's like, hey, you go to a crypto exchange, you go to there, and there's no options for staking your crypto to earn a return, and it's actually going to cost you some more to actually do a transaction. Like right now, I'm not sure what the costs are to do transactions, but when you see a point where it's actually like they're charging you $10 to do a transaction or something, then that's probably the point where the crypto winter is finally able to be over, because those crypto exchanges, all those places where you can put your crypto, they actually have to make money the only way that you can actually make money legitimately, which is like, okay, I offer service to allow you to trade crypto. That's it, right? Offering your service where I pay you 10% on your crypto is like, they can't do that in any kind of a non-risky way. That's just how it works. And so when you finally see that opportunity to stake crypto go away, and they're not promising you insane, non-realistic amounts of interest, then that's the point where maybe the crypto winter's over. But I really view it as really like a kind of a situation where, I don't see the value in crypto at all at this point. It's just not going to replace fiat currencies. It's not decentralized. None of these things are really true. It doesn't really solve the problem. And it doesn't solve the problems with fiat currency and with governments, abusing the fiat currency situation that they have. And the reason is that it's people, right? You have to understand that it's people that are involved in these things. And that's what you're seeing with the crypto thing, the FTX, all this stuff. I mean, you're seeing just outright fraud and criminality, and you're seeing outright just greed. And this is all because it's humans involved. So there's no magic currency. There's no magic currency that's going to get rid of that issue. So it doesn't matter if it's fiat. It doesn't matter if it's gold backed or anything else. There's always opportunity for people to go ahead and abuse that system. And so, like, if you look back and you really look like back at the US system, I mean, there's a lot of potential for like printing a lot of money, and that's caused a lot of the problems that we have. A lot of the inflation, it's more than just supply chain issues. It's really, a lot of it has to do with the fact that they printed all this stimmies, and they just printed a lot of money. And that's the reality. And at some point, it is inflationary, and we found what that point was. So the point is that you can the system that we have in the U.S., the dollar system, is not in and of itself a problematic, but it has been abused since Greenspan in 1987. What he started doing with the Fed put, he's basically been abusing that system to benefit specifically banks and Wall Street, at the detriment of everyone else. And that's what's happened. And that wasn't always the case. Going back to 1913, when it was created, that wasn't always the case. They didn't always just go in and be like, oh, we're going to risk hurting the economy. We're going to risk high inflation by printing out a bunch of money to bail out banks. That wasn't always the case. So what the situation is, crypto doesn't really resolve any of that. The only thing that resolves these issues is you have to have people in charge that are responsible with it. You have to say, look, I mean, any monetary system, you're printing money. You really are. And gold is like one way is like, okay, you're not printing it, but you're mining it. Okay, fine. But the problem is there's always some leverage factor to it. There always can be a leverage factor. And if the only thing that saves us from the problem of the high inflation, the distortions in the economy, and all the problems that come with just free money being handed out, the only thing that saves us from that is responsible people that understand the downside of doing that, and are willing to give up the power involved, right? Because it's power. Okay, that's what you're saying. I mean, why does the government print all this money? Why do they do that? Well, they do it for power. That's why they do it. They want, whatever they're spending on, they're buying votes, they're buying government contracts, they're buying this, they're buying that. That's what they're doing. It's all about political power. So I think that's it for this one. Just look for that staking. Look for the point where you can't make money on your crypto. If there's no option to make money on your crypto, then that's maybe the bottom's finally in. All right, talk to you later. Bye.